Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Monday, January the 17th. The year is 2022. Let's talk trading, problem solving, part 5. As always, these videos are for educational purposes only. Your results may differ from mine. We've been talking about problem solving, and I think in last night's video, I mentioned I received a message from a trader who was asking me teach how to trade your way out of a mess. Well, I'd written an indicator years ago called Trade Your Way Out, but I guess what I really want to say is um, I would avoid that, especially in the beginning. I would focus on your risk management, and I would put a stop loss in, and if price hits the stop loss, then that trade's over. And it's one of those hard lessons because of our brain, okay? Because you see, when we stop out, and then all of a sudden the price goes our way, then you're going to be thinking about you're going to have some rogo, and you don't stop out because you're thinking it's going to do that. And so you get yourself into this no-win situation because if you stop out, you lose. If you don't stop out, you're probably going to lose even more, but your brain's saying, well, if I stop out, it's going to reverse. If I stop out, it's going to reverse. You really have to get control of that. And I know it's not easy. And you think you can, let's say, outsmart the market because you get in a losing trade and you add to it and it starts to go back your way, and then hopefully maybe you'll see green after one or two ads and then you punch out. But the reality check is that first trade when you punch out most likely is going to be negative. It's still going to be a loser. So I just want to put that out there because it's just so important to learn that lesson and to stop out rather than try and trade your way out. I mean, we think we're smart. Now, the only way around that is if instead of going in with a full position, you start to make small tests. So let's say you trade one standard lot normally. Well, maybe you'll go in with a mini lot or two mini lots, and it goes against you a couple of pips. And then you're looking and say, I still think that signal's good. So then you add a couple more mini lots to it. And then maybe you build up to a position of a whole lot. And then you can say from there, either it's going to be a winner or a loser. Because as you're adding to it, you're adjusting your stop accordingly. So you still don't lose any more on that on that aggregate trade than you're willing to lose on a trade. So it's just really important to do that. Okay, so for the month, right now we're up 124 pips from the open, 99 off the high, and 220 off the low. We're still putting in that weekly range here, and we still have some gaps that have not filled, but the pound filled its gap. You can see we're on a down day coming out of the previous day's lower wick zone. And notice we're 8 pips above last year's open. We're 124 pips above this year's open. Now 123. Inside bar action. There's a lot of inside bar action. All the gray and the blue you can see there. We're still inside the monthly candle. That was an inside bar 3 months ago. And it's a holiday here in the U.S., Martin Luther King Day being observed, and no pairs are over 100 pips at the moment in range. And you can see right here the shorts paid off. The longs paid off too, but only a handful of pips. But once again, it's a holiday, so take your pips when you can. Range is large enough here, so green rats might be looking for a feast, though I would be careful. As far as the pivots, we hit the weekly pivot. We did not hit the daily pivot. And you can see here near S1 bias is long. We got near S1 and it came back up. We missed the today's pivot by 2 pips, but it's still a missed pivot. So this year so far we've got 3 missed pivots. We'll have to see what happens. Oh, I forgot. As far as the week, we took out the weekly pivot here. And the month, we're still a ways off from that monthly pivot, 236 pips to be exact. Okay, looking at the wick zones, let me switch this back over to 1 hour. You can see here, price doesn't like staying in the wick zones. It's closed outside 81 times out of the last 100. Just want to double check something. And that was on the hourly. And then if you, that was, but on the daily, you can see 73 times out of the last 100 days, it closed outside of the wick zones. So once again, price does not like staying in the wick zones. You can, there's your statistics right there. Oh, just in case, if you're wondering, these were 2014 donational indicators. And looking at the scalper, the high, low, low, high scalper, right here, there was a nice scalp to the short side. And this was right around to the wick zone that we just looked at here. So you can see here, 529. This was actually above it. But you can see taking that trade or waiting for 529, either one of those trades would have been profitable. And the Walmart lines on the sweet spot gold indicator, as you can see, there was a short called at 60, and that would be up over 10 pips. Last hour, there was only about 3 pips to be had going to the north. But once again, you can see here during the current hour and the previous 2, not that much range. Once again, holiday. As far as the ATR, you can see we're not near any of the ATR zones. Not the, so once again, muted range, only 52 pips. And you can see here, looks like we've been taking out just a couple of the highs and lows here. Indicators saying, hey, it broke out of the daily to the south, caution going long. On the monthly, it says caution is going short, but the daily is going to override the monthly because we're so far away. So we'd have to get a little bit closer to the to this line right here. As you can see, it's already been taken out because we're not showing any of the lines that have been crisscrossed. And if you're wondering, this is just TROHL5, just not showing the crisscross lines. You can see here, it looks like we want to make a new low. And I was mentioning yesterday about another indicator, but I thought I'll hold off on that because I just really want to stress the fact about um, not trying to trade your way out of a mess because you're probably most likely only going to make a bigger mess. And just because one person can do it doesn't necessarily mean you're going to get lucky and do it. Because remember, you don't control the market. You can only react to the market. So you just have to learn to take your losses. It's just part of trading. I mean, it's like playing baseball. You're going to strike out. You may or may not hit a home run, but chances are you're going to strike out sooner or later. And so you really need to figure out what your trading method is, what your trading triggers are, and stick with them. I mean, there's really nothing more to do. And so uh, I read something about risk management that's pretty telling. It says risk management is about decision-making strategies that seek to maximize the ratio of potential reward to potential risk within a given acceptable level of risk. That's something that you might want to ponder because there's a lot in that statement. So I really want you to think about that. Risk management is about decision making strategies that seek to maximize the ratio of potential reward to potential risk within a give within a given acceptable level of risk. So you really need to apply that to your thinking, to your trading, because if you're trading any method, one of mine, one of your own, somebody else's, doesn't matter. You have to have a risk management strategy that gives you a chance to stay in the game and to actually win. Because, we don't know if the next trade's going to be a winner or not. But and I've said that many times, we don't know. I mean, that's one of the things Mark Douglas used to talk about. So if you think about it, you can control your position size, and that's part of controlling your risk. So if you don't go in too heavy, you're not going to get caught. So I want you to ponder that, and I'll probably give you a few more things to ponder this week because we are still talking about problem solving. So it's quite possible the problem you have to solve is that maybe your risk is too big for what you're doing, or it's too big for your level of skill at this moment. And that's a hard pill to swallow sometimes because we all like to think we're better than we really are. So just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. And this is the Rumpled One, over and out.